You're listening to Kerry Lutz's Financial Survival Network, where you get valuable information you just can't find anywhere else. To thrive in today's trying times, you need the Financial Survival Network, now more than ever. Go to financialsurvivalnetwork.com and get your free newsletter and gift. Financial Survival Network, now more than ever.
Welcome. You are listening to watching the Financial Survival Network. I'm Kerry Lutz. Well, a lot going on in crypto. It looks like a bear market in Bitcoin is with us. 19,700, which was its 2017 high, has now become its resistance point. And we've been trading under it for a few days, mildly under, might go back and forth, but it looks downright bearish. Well, here to explain to us what's going on is RubiconCrypto.com's Gregory Johnson. Greg, it's great to have you back on. So what's going on in the crypto world here?
What isn't going on, Kerry? It's good to be with you as well. I mean, listen, your opening says it all about the one that started it all with Bitcoin. And we talked about this a couple months back. I think we are in for a few more months of this crypto winter, as they like to call it. With volatility, ups and downs continuing. And fortunately or unfortunately, a lot of that behavior is going to depend upon what's going on with the traditional financial world, and in particular, our friends at the Federal Reserve and all of the up and down business that we've been experiencing as of late, mostly up as it applies to interest rates, trying to deal with this bear of inflation. And so that's going to be a broken record story, I'm afraid, for the foreseeable future. But I'm not sure that it deters any of the optimism that we have. And it certainly doesn't deter any of the excitement that we have about what should be the timeline investors should be thinking about, whether it's with Bitcoin, Ethereum, or some of the more desirable altcoins that are out there in the community. So you nailed it. Boy, it's been bearish.
Well, you know, a bull is generally a person who hasn't been around long enough to live through a bear market.
I love that.
That's what I say. And certainly with Bitcoin, I don't think the decline's over by any stretch. I mean, we look at Fibonacci retracement numbers, retracement paths, all of that. Bitcoin was at 67, almost 68,000. It is now down to just under 20. So that's a 2/3 retracement. It could easily do an 85% retracement like it did after the 2017 high. Where would an 85% retracement leave us here, Greg?
Well, I think that would leave us in a place where, for most folks, now remember this, Kerry, the vast majority of American wealth has no exposure whatsoever into the digital asset and crypto industry. It's part of the reason we started and formed the company a couple of years ago, was because we knew it was going to take some time to get this adoption. I think where it leaves the industry and it leaves the market is it leaves everybody with an opportunity to get in at relatively attractive pricing, in my humble opinion, as we look out over the longest term. I think the big story that we do need to talk about, though, is Ethereum. As you and I both know, Ethereum is the second largest crypto by market cap, but it's the largest in terms of network usage and integration. And it recently underwent something that, if you were paying attention, even in the normal news channels or listening to your broadcast, you've heard of the merge. And this merge is what they call this radical retooling of how the blockchain Ethereum was going to generate new tokens, how it was going to govern itself, how it was going to administer itself. It easily, if we weren't dealing with Powell's inflationary strategy, if we weren't dealing with war in Europe, this would be one of the biggest stories in 2022. The transformation of this blockchain was massive, and it has profound implications. Short term, the cheeky answer would be the implications have been the price of Ethereum haven't benefited from this. But for the average person listening or viewing today, Ethereum moved from this so-called crypto mining way of running their system to something called proof of stake. And so, on a number of levels, it's a massive experiment in the industry. It's a laboratory for what might happen in the future for all these other exciting projects that may choose a similar path. And for the environmentalists who are concerned about crypto's impact on climate change and the environment, the move basically took away 90 to 95% of the electricity used to operate this very, very large network. And this is something we're watching very, very closely.
All right. So, granted, these benefits, but like you said, indifference. It's the same thing in the precious metals markets. Nobody cares if you strike 100 gram per ton gold or multi-kilo silver per ton. Nobody cares about it. So imagine, if they threw a bull market, but they didn't tell anybody. Is this really going to matter in the long run? Fear going on all over Europe, dollar hitting record levels on the Dixie exchange, on the Dixie index rather.
Yep.
And, cryptos there's all sorts of ETFs and there's all sorts of futures contracts, which means manipulating them is a pretty simple matter, isn't it?
Well, I think that view, I think we could take to just the whole investment industry as a whole. I'll be candid with you. From my perspective, I think the opportunity for large institutional players to be able to game the system has never been greater. And by extension, though, I think it would be fair to say that it's never been easier for the average Joe on the street to be more well-informed, whether it's listening to your program that's always bringing insights to bear, or whether or not it's the access to the internet and information that people have. I do think people have a chance to sort things out versus when they did when I was a CFP practitioner in the 90s. There was no other information available, to give you an idea. People now have so much at their disposal, Kerry. That's the best way I would respond to that.
That is the Rubicon. I would make the argument, Greg, that there's almost too much information out there from anybody who has an opinion. I'll give you, for instance, I love Tesla. I own a Tesla. Yep. But there was a so-called Tesla expert doing a video saying, oh, well, they've got $8 billion in deposits, and they can just take that and recognize it as income whenever they need to. Now, that represents a fundamental misunderstanding of how corporate governance works, how GAAP works, generally accepted accounting
principles. My goodness, what are those, right?
Yeah, and how securities fraud works. Because the fact is, when you get a deposit and it's refundable, then it is a liability. And you can't just go erasing the liability to jack up your profits. Do companies do it to some extent? Yes. But the idea of taking billions from your deposit account, liability account, but that just shows the immaturity and ignorance of most of the people you see. So then it's a question of, do I believe Greg or do I believe some other guy out there? I don't know.
Don't just survive. Thrive. The Financial Survival Network.
Torque Resources is an exploration company establishing a portfolio of premier copper-gold early-stage projects in Chile. Torque's management and technical teams have a strong track record of raising capital, discovery, and monetization of exploration successes. The company's Margarita copper-gold project is located within the prolific coastal Cordillera Belt in Chile, which hosts some of the world's largest and most profitable copper mines. The Margarita project possesses excellent discovery potential for a major copper discovery due to the strength of the alteration system, large-scale magnetic targets, and the presence of copper oxide mineralization. Drilling is anticipated to begin in Q3 of this year. Torque trades in Canada under TORQ and on the OTC under TRBMF. To learn more, go to torqueresources.com. That's torqueresources.com.
This is the Financial Survival Network, the information you need to thrive now more than ever.
I do know, and I do know, and you teed up one of my soapboxes, or two of them actually, that I'll try and not stand on, but I couldn't agree with you more. One of the reasons we founded the company was because of all of the nonsense, all the irrational exuberance that's been out there, Kerry. polluting the waters. We found doing due diligence for over a year just how many seniors were involved in crypto at excessive levels. Just because somebody's a senior or a retiree doesn't mean that they shouldn't have maybe an exposure to crypto, but not some of the nonsense that we were seeing about.
5% or less, right?
Absolutely. As a matter of fact, if you're a senior in today's market, I would argue no more than 3%. And that's for a seasoned investor that's used to the kind of swings that maybe you and I are used to. But this is exactly what we're seeing. But it wasn't just Elon Musk. We're talking about celebrity endorsers on social media. If I'm going to give the SEC credit for anything, about 3 weeks ago, not that anyone read it except for geeks like me, but they put out an announcement on their website and in their alert system that they were warning the investing public to watch out. Shocking here, newsflash, shocking here. To watch out for social media crypto scammers, celebrity influencers.
Really?
And
I didn't know they were there. Are you sure they exist?
Yeah, like shocking, right? And I think that, that is one of those major stories. I give the Brits a little bit of credit with their regulatory agency, the FCA. They kicked the Kardashians right out of the celebrity influencer market for investments early. And we've been very slow to the dance in order to do that, to protect our investors, because we do need to have rational exuberance. Everything that we try to do is to give folks a fighting chance and to treat crypto the way that they manage the rest of their portfolios if they use a professional manager. Just
By the way,
right? Yeah.
By the way, did you catch that article that Matt Damon lost like $10 million because there was I guess he was like the heavy thumb and he made a typo on his transfer and now they were trying to get it back. I don't know if they got it back or not.
Well, fortune favors the brave, and evidently those that know how to operate their keyboards. Viewers might get the pun there, but I'm from Massachusetts. We like our Massachusetts actors. We like Tom Brady up in Massachusetts, but the reality is the kind of commercials that those two celebrities have been a part of, I think, represent what's wrong in general with the investing in celebrity culture, and it has profound impacts, not just evidently to Matt's bank account, but to a lot of people who took fortune favors the brave very literally and got in over their heads. So I think that might be a little bit of the world's karma or poetic justice coming in, Kerry. I don't know.
Wow. Well, I just thought it was quite entertaining and definitely got a kick out of it.
Not the first, not the last.
Yeah. Yeah, that is the truth there. Definitely. And there'll be more and more of these things as time goes on, because the one thing, when you hit that button on a crypto wallet, it's final. There's no going back. And hey, if the person is nice enough to basically return your funds, great, but I wouldn't count on it. Hey, so what are 3 things potential crypto investors should be looking at right now, looking ahead? Yeah. What do you do?
Well, first of all, as I mentioned in the opening, I do think in general, I can't speak to any individual cryptos when I make this statement. In general, if you have not gotten involved yet, this might be one of the best times for you to make your first entry with a very small allocation. Certainly, if you were thinking about it a year ago, you're certainly glad you waited. And I do think for all those folks that did get on board, especially with Bitcoin and Ethereum, if they hold on and they had the longest time horizon in mind, they're going to be okay too. But this is a window of opportunity, number one. Number two, what's going to drive the next bull run, ironically, is regulation. Regulation from the US in particular. The industry has been whining, complaining about regulatory clarity, and boy, have they gotten it this summer. I like to refer to it as the endless summer, pun intended, of crypto regulation. And we are seeing an incredible spike, not a moment too soon, in the regulators getting involved with trying to provide and sort out who's going to manage and oversee what. And I think when that happens, you're going to see the broader wealth management industry enter. And when that happens, you're going to see all boats rise with that tide of entry. So for folks that are early adopters, that are a part of the 16 to 18% of the investing population that are in crypto, they will benefit from that increased structure from a regulatory perspective. So that is definitely something to keep in mind. And then the third tip that we give everybody, and I'm going to say it ad nauseum, is if you are involved in digital assets and you're investing in them, you can't have a long-term view. You have to have the longest-term view.
Yeah. Okay. But, in the long run, we're all dead here, Greg.
Well, long-term used to mean 10 to 12 years in the olden days when actual CFP modeling made a difference. I'm just asking people to put things in the same perspective. If they look back at the charts and they took a look at our friends Amazon, and we took a look at how Amazon behaved. Greg did not say on the Kerry Lutz show that crypto is Amazon. But what Greg is saying to everybody is that when I say longest term, the time horizon there was a long-term horizon. It was well over a decade. For 8 or 9 years with Amazon, if you bought day one, they went public. I think you know this already. It was flat, net of inflation, you were negative. And then you weren't. And then you were glad. And I think that's the kind of approach that folks need to have. If we see the future as increasingly digital, more and more digital products like crypto and tokens are going to have a role to play. And the thing that's slowing that bull run and that next wave is adoption levels. And I think that is inevitable. And so for people to be in it, you just need to realize that adoption threshold, that growth of global adoption, US adoption, it may be 3 years, but it may be 5 to 7 years out. That doesn't mean you shouldn't be looking at this very carefully and closely in our view.
All right. Well, I think that sums it up pretty well. Hey, if you got a question for Greg, myself, shoot us an email, kl@kerrylutz.com. Go over to the site, financialsurvivalnetwork.com. Sign up for your free newsletter. And hey, Greg, we'll be talking to you again soon. Thanks for coming on.
Looking forward to it, Kerry. Have a great afternoon. Stay safe.
Thanks for listening to Kerry Lutz's Financial Survival Network, your solution to today's trying times. For the latest, go to financialsurvivalnetwork.com. Financial Survival Network, now more than ever.